Welcome to Coverage and Clarity with Jacques, the podcast where we break down protection, planning, and peace of mind so you can make confident decisions for the people who matter most.
Welcome to Coverage and Clarity with Jacques. This is where we slow things down, remove the confusion, and focus on what truly matters, protecting the people you love with confidence and understanding. Because at the end of the day, this isn't just about policies or numbers. It's about people. It's about families. And it's about making sure the decisions you make today continue to support the people you care about tomorrow. Now let me ask you something, and I really want you to sit down with this for a moment. When you retire, does your financial responsibility truly disappear, or do they simply evolve into something different? Because many people spend decades working towards retirement, saving, planning, sacrificing, with the belief that once they reach that point, the heavy lifting is done. Because for many people, retirement is viewed as the finish line. The mortgage is closed or close to being paid off. The kids are grown. And the belief is, I've done my part. And in some ways, that's true. But here's what often gets overlooked. Your role in your family may shift, but your values, your influence, and your impact does not. Your presence still provides stability. Your decision still shapes outcomes. And your financial structures still affect the people you love. That's exactly why life insurance doesn't end at retirement. Even though your responsibilities may shift, your impact on people you love does not. You may see many people believe life insurance is something you only need when you're young, when your income is high, and financial obligations are heavy. But the truth is, life insurance doesn't go away in retirement. It simply adapts to a new purpose. It matures. It evolves. It becomes less about protection from the unexpected and more about planning, clarity, and legacy. And today we're going to walk you through this together, step by step, so you can clearly understand not just if you need coverage, but why, and more importantly, how it should serve you at this stage of life. What role should it play in your life today and in the legacy you leave behind tomorrow? Let's start by grounding this conversation in something simple, but very powerful. Life insurance is not static, it's dynamic. Let's look at how life insurance functions before retirement compared to during retirement. Before retirement, life insurance is primarily about income protection. It's designed to answer one critical question. If something happens to me, how does my family continue financially? So during those working years, your policy is there to replace your income, protect your spouse from financial disruptions, ensure your children can still be supported, educated, and cared for, cover major obligations like your mortgage, car payments, or personal loans. In other words, it's about creating a financial safety net at a time when your family depends on you the most. It should evolve as your life evolves. Now, as you transition to retirement, that dependency changes. You're no longer the income engine in the same way. Your children are likely independent, and many of major debts may be reduced or totally eliminated by this point. But here's where many people misunderstanding of the role of life insurance. They assume that because income protection is no longer a priority, coverage is no longer necessary. And that's simply not the case. You replace income with a structured income. That means that your Social Security, pension distributions, investment withdrawals, and while they may feel stable, it's often less flexible and sometimes more fragile than people realize. Because in retirement, life insurance shifts from protecting your income to protecting everything you've built. Now, the focus becomes preserving your assets, supporting the financial independence of a surviving spouse, managing final expenses, upholding the integrity of your estate, creating a structured and intentional legacy. So instead of asking, how do I replace my income? You begin to ask, how do I protect my family from financial disruptions one last time? That shift is where real planning begins. Now let's talk about what actually changes financially in retirement, because this is where clarity becomes the focus. Let's slow this down and really unpack what changes financially in retirement, because this is where many gaps are created unintentionally. When you retire, your income structure changes completely. Instead of earning a paycheck, you're now relying on sources like your Social Security, your pension, and that's only if it's available. As you know, many people don't even have pensions anymore. And without withdrawals from retirement accounts such as your IRAs and 401ks. Now, on the surface, that may seem stable, but here's what we have to consider. These income sources are often fixed or limited. Unlike your working years, you can't simply earn more to solve a financial problem. When Social Security may adjust, but don't always adjust quickly to inflation. They don't always account for unexpected expenses. And in many cases, they may not fully replace your previous income. Now, this surprises a lot of people. You expect expenses to go down. At the same time, your expenses don't disappear. But certain categories actually increase. Healthcare becomes a major factor. Prescription costs, doctor visits, potential long-term care needs. All these can simply be significant on your financial resources. And then there's inflation, which quietly but consistently reduces the purchasing power of your money over time. So now the financial risk shifts. During your working years, you're building. Now you're protecting. It's no longer just about protecting against an early loss of income. The focus becomes, how do you protect what you've accumulated? Avoid unnecessary financial strains on your loved ones, and ensure that your legacy is transferred efficiently and intentionally. So the real question becomes, when the time is here, will your financial situation create clarity and support your family? Or will it create stress, confusion, and an unexpected burden? This is where life insurance becomes a stabilizing tool, not just a protective one. That's the role life insurance is designed to help address at this stage of life. Now let's make a real practical decision. Let's now walk through specific ways life insurance is commonly used in retirement. First, you have final expense coverage. This is about dignity. This is one of the most immediate and important issues. At this time, when your family is grieving, the last thing they need to deal with is financial pressure. Now, funeral costs alone can range anywhere from $8,000 to $15,000 or even more. And that doesn't include your medical bills, legal and administrative expenses, and any outstanding obligations that you did not pay by this point. Now, without a plan in place, these costs are often passed directly to your loved ones at a time when they're already dealing with the emotional stress. Life insurance ensures financial responsibilities are handled with dignity, without burden, immediate funds are available to them, decisions can be made without urgency or stress, and your wishes are honored without compromise. Now, second is debt protection. Even in retirement, financial obligations can remain. And here's the truth. Debt doesn't disappear when someone passes. It just gets transferred or impacts your estate. This may include a remaining mortgage, credit card balances, personal loans, or even co-sign obligations for children or grandchildren. If something happens, those debts don't disappear. They just shift. Life insurance allows you to resolve financial responsibilities without impacting your family, eliminating that burden, protecting co-signers, and preserving the assets that you would otherwise be liquidating. Now, with income protection for a spouse, this is one of the most overlooked risks. Now, this is a big one. In many retirement households, income is structured in a way when one spouse passes, a portion of that income is reduced or lost. For example, Social Security benefits may decrease, pension payouts may change, Investment income may be impacted. That can create a financial gap for the surviving spouse. Life insurance provides a layer of protection, fills that gap, ensures continuity, stability, and a peace of mind for the surviving spouse so that they could adjust at this point without any added pressure. Now, fourth, we have your legacy and wealth transfer. Now, let's move into planning. This is where planning becomes intentional. Life insurance allows you to leave behind a tax advantage benefit to your beneficiaries. What it does is provide immediate liquidity, predictability, and control over how your legacy is distributed. It allows you to decide who receives what, when they receive it, and how it supports their future. It can also be used to equalize inheritance amongst children, support charitable giving, or leave behind something meaningful beyond just your assets. Finally, we have estate planning support. For individuals with larger estates, this becomes a strategic tool. Life insurance can provide the liquidity needed to cover estate-related expenses without forcing the sale of property or other valuable assets. Life insurance provides the liquidity needed for your estate to be preserved, to settle obligations, and transferred according to your wishes, all while preserving your assets. At this stage, the conversation becomes more strategic than ever. Now, let's talk about the life insurance policies that often come into play during retirement. First, you have your term insurance. Many individuals enter retirement without an existing policy. But here's the reality. Term insurance is temporary by design. As you approach the end of that term, you're faced with an important decision. Do I still need coverage? And if so, what's the best way to maintain it? For some, conversion becomes critical because it allows coverage to continue without new underwriting. In some cases, converting that term policy into a permanent policy may be a valuable option, especially if your health has changed over the years. Next, you have your whole life insurance. This is about stability and guarantee with lifetime coverage, guaranteed and fixed premiums, guaranteed death benefits, predictable cash value growth accumulation over time. It's often used when certainty is the priority. And we also have what's called the Index Universal Life. Now, these policies offer flexibility in premium structure, potential for cash value growth, and options for lifetime coverage. Now, at this stage of life, the conversion is no longer just about how much coverage do I need. It becomes more about strategy. It becomes what role do I want this to play in my policy, in my financial life, and the legacy I leave behind for my family. Now let's address a key decision point. Should you keep your coverage, adjust it, or let it go? Well, the answer to that depends on your current situations. You may want to keep your policy if it continues to support a surviving spouse. It still serves a clear purpose. It aligns with your legacy goals or overall financial stability. You may want to adjust your coverage by reducing the face amount, converting to a more suitable policy, or restructuring how the policy is funded. But here's the key. Every decision here has consequences. For those consequences, they don't affect just you alone. They affect the people connected to your financial life. Making that decision without a proper review can lead to unintentional consequences. And that's why having a thoughtful, guided approach is so important, especially at this point of life. Now, with your living benefits and cash value, is one of the most overlooked aspects of life insurance and retirement. And that is the living benefits. The cash value isn't just sitting there. It could be accessed, could be used, can become a strategic part of your financial plan. This is where life insurance becomes more protection and becomes more of a financial asset. Permanent policies can build cash that grows over time, can be accessed strategically, adds flexibility to your plan. You may also be able to access it through policy loans and withdrawals, and that can provide you supplemental income during retirement, a source of emergency funds, or flexibility when unexpected expenses arise. In some cases, living benefits can allow access to funds in the event of chronic illness or terminal conditions. So now you're not just talking about if something happens, we're talking about what happens if life changes while you're still here. So when structured properly, life insurance is not just a benefit for your family when you pass away, it also serves as a financial resource while you're still living. Now let's be honest. Most gaps don't happen intentionally. They happen quietly over time. Let's take a moment to consider highlights about some common mistakes that can occur during retirement planning. Number one, allowing a policy to lapse, often unintentionally. Number two, failing to review and update your beneficiaries. Number three, assuming policies are set it and forget it. You don't monitor how the policy performance is going over time. Number four, overlooking long-term care considerations. And number five, assuming I don't need this anymore. Now, that assumption without proper evaluation can create gaps that are difficult to recover from. So let me leave you with this. Life insurance in retirement is not about fear. It's about obligation. It's about maintaining control, preserving dignity, protecting the people who matter most. And it's about legacy you choose to leave behind. Because at the end of the day, it's not just about what you've built. It's about what you protected, how clearly it's passed on, and how effectively it supports the next generation. So I encourage you, take a moment and ask yourself, does my current coverage still align with the life that I've built? Now, if you're not sure, that's okay. You don't have to navigate that alone. If you'd like clarity, if you'd like me to walk with you step by step, I'm here to help you guide you through that process. Now remember, I provide coverage to my clients nationwide. To contact me, call or text the studio line at 631-594-8118. Once again, 631-594-8118. Thank you for taking time with me today. And as always, this is Coverage and Clarity with Jacques, where we make complex issues simple and help you move forward with confidence. Until next time, take care.